Hello, Accounting One. We are now going to go into, if you can get into your Mind Tap, and when you get to part 1 of the book, click your down arrow, and then come down to chapter 2, or chapter 3, sorry. Chapter 3, down arrow that, scroll down to where you see lesson 3-3, open up the end of lesson review under 3-3. And then we're going to open working papers. This is a continuation of 3-1, 3-2, where we started doing these posting to the General Journal. So we're going to load this. I'm going to show you through the work together, and then I'm going to let you do the work on your own. All right. So today we have, this is still Norma Dirks. We started Norma yesterday, and we had, 4 or 5 transactions for her yesterday. Now we have some more transactions for her. It's still Norma Dirks Copy Center. Her chart of accounts still looks the same. It's the very same accounts that we had before, only today we're going to be using more of them. We're going to be using more of these accounts. Okay. Transactions are in your book, but they're also listed right here. We have 6 transactions we're going to go through. You scroll down so that you can get to the General Journal, and you'll see the 5 transactions that we did yesterday are in the light gray. So now we just have to keep going on the same document because it's still in April. All right. This is double entry accounting because every transaction impacts at least 2 accounts. Each transaction account takes care or impacts at least 2 accounts. One's going to be a debit and one's going to be a credit. Now, this is where the DC Adler comes in that I've been trying to get y'all to memorize. All right. Because DC means debit credit, and debit and credits have to always balance. If you'll notice, it's a stair step here, and I can easily see that my debits equal my credits for each transaction. All right. And then we have assets. We have drawing, which we'll be using today for the first time. And we have expenses. We have liabilities. We have equity, which is the capital account. And I'll just put in parentheses, capital account. Capital. So that would say Norma Dirks Capital. And then we have revenue, which is sales. Liabilities are accounts payable. That means we have to pay them. We have to pay them. Assets, remember, are everything that you own that has value. It also includes your accounts receivables. Okay, so keeping that in the margin so we can refer back to it as we do these accounts, as we do these transactions. So first transaction is on the 12th, paid cash for rent. So I got to figure out what 2 accounts are being impacted. Well, I know cash is being impacted, and it says paid cash. Cash is an asset. Assets increase on the debit side. That means that they decrease on the credit side. So for this first one on April 12th, I know that I have to put the 12th, and I know that cash is going to be my debited amount. The amount is $650. Now, when they pay cash, they always use a check. We got to figure out what is check number 4, it tells us. Now we got to figure out what's the name of the debited account. Whenever you post these in your General Journal, the debited account goes first, The credited account always goes second. These are like stair steps as well, as if you'll notice. The credit account is always indented because the dollar amount is always in the second column over here. So it makes it easier on the eye to read each transaction. So let's go back up here and it says pay cash for rent. So I go in here and I look at my chart of accounts, and the only one that makes sense is to put it under rent expense. Rent expense. So I come down here and I type in rent expense. Okay, debits equal credits. Expenses increase on the debit side, so that makes sense. They're going up on this side. Cash goes down on the credit side, so that makes sense. My next transaction is the 13th, receive cash from sales. We like that. We like receiving cash. So cash is an asset and increases on the debit side. It just told us that we received cash. And it told us that we received it from sales. Now go up here and I see T13. T13 means calculator tape from the 13th of the month. Calculator tape from the 13th of the month. This is money that came in from the cash register. So this is cash, checks, credit cards. Okay. And it says here $2,500. So they took in $2,500 from the cash register and they deposited that into the checking account, which is, or into the bank account, which is the cash. Debits still equal credits. 13. Oh, on this one, cash went up, which was an asset, and sales went up, which is a credit. So they both increased. Next transaction is the 14th, sold services on account to K Spa. Sold services on account. So there's no cash being given away here. K Spa is saying, I can't pay you right now. Can I pay you within 30 days? And Norma says, yes, that'd be fine. You can pay me what you owe me. You can pay it within 30 days. So this is a S1 is the document, which is a sales invoice. Because Norma is going to keep records of everybody who owes her money. She'd be stupid not to. So this is a document for Norma to keep in her records at her business to remind her that K-Spa owes her the $480. Okay, this is on the 14th. Now, if you go here to the chart of accounts, we see here that there is a chart of accounts. There is an accounts receivable for K-Spa. Okay, so we have to type it in here. Accounts receivable dash K-Spa. Now, the other side of this is sales. You record the sales when they happen, regardless of when you get paid for it. You record the sales when it happens. The dollar amount is $480, and our source document, again, is the S1, is the sales invoice, page 1, and it's $480 worth of copying that K-Spa bought from Norma that she's going to pay later. So accounts receivable is an asset, so that's going up. Sales goes up on the credit side, so your debits equal your credits. Next transaction, paid cash for the electric bill, $220. Well, I know cash is going out, $220. And this is going to be check number 5 because right here we used 4. Your check numbers stay in numerical order. Now we got to figure out paid cash for electric bill. Go back over here. Look under these accounts. Okay, electric bill would go under utilities expense. Okay, utilities would include your electricity, your water, your phone. Okay, so utilities expense. And this is on the 19th. 19, utilities expense. Okay, again, expenses go up on the, they increase on the debit side, so that makes sense. And you're paying cash out as an asset, assets decrease on the credit side, so that makes sense. Next transaction is on the 20th, received cash on account from Case Spa, $255. On the 20th, we received cash. 20th, and we like receiving cash. Okay. It's from accounts receivable. Okay, Spa. Okay. Now, whenever anybody gives your business money, you give them a receipt. That's why it's R2 right here, receipt number 2. So we got to fill that in as the document. No different than me going to Arby's and buying a sandwich. They're going to give me a receipt for paying for that, giving them money. Now, how much did she pay? K Spa paid $255. Okay, let's analyze it. Cash is going up. Cash is an asset and goes up on the debit side, so that makes sense. Okay, the accounts receivable is also an asset, but in this case, it's going down, so it has to be on the credit side to show that K Spa paid us some money. Now, Norma is okay that they didn't pay the full 480. They paid a good chunk of it, and that helps Norma keep her business running. Now, the last transaction is 21st, paid cash to owner as a withdrawal of equity, $1,500. The 21st, paid cash, so cash goes down here, and it was $1,500. And it was check. Here's check number 5. So this one has to be check number 6. You keep those checks in numerical order. If you don't, it makes it look like somebody stole something, stole money from your checking account. Now we got to figure out what account goes in here. And I told you at the beginning, this drawing account was this today was going to be the first time where you were using this drawing account. This is a withdrawal. Notice it says that withdrawal. Okay. Now, Norma Dirks owns her business and she has her personal life. She can legally take money out of her business because it's her money, and she can use it for her personal life, but she has to record it. So that's why we're using this Norma Dirks drawing account. The drawing means that she took the money out to use for her personal life. All right, so Norma Dirks drawing. This is completely legal. It's just that she has to record it. Otherwise, it looks like somebody stole the money out. Looks like she's embezzling from her own company. So that's all there is to this 3-3 work together. I'll check my answers. I go down here and it shows me something was wrong. Oh, I put 200 in there instead of it won't let me change it now. I put 200 instead of 220. My debits didn't equal my credits. So that was that I would have had to go back and correct. Okay. I just barely missed it. All right, so now it's your turn to go in and do the on your own. Use your book. It shows you everything there, and you can go back in this video. So until next time, stay safe and stay well. I'll see ya. Bye.